Today's video is going to be around opening balances and how to set that up when you start using your new system. The main thing behind this is that your closing balance of the old system should match the opening balance for True ERP. So if your closing balance at 12 a.m. Wednesday and your opening balance in True ERP at 1 minute past 12 on Thursday, those two should match. So again, closing balance from the old system and opening balance of True ERP should be the same. So now there's a couple of ways of doing this. So if you pull up an invoice, if we go have a look at any invoice, and there was an invoice for say 271 on the dot, or 270 on the dot, but $100 of that invoice was paid in the previous system. The remainder should be what's payable in the new system, not that 271. So the outstanding amount is what should be put in there. So again, the opening balance should be the amount outstanding, not the total of that invoice. So again, if this was say 100 or 200 and 100 of that invoice was actually paid and there's 100 outstanding, the amount being 100 should be the outstanding amount, or should be the balance being the 100. So that's one way of putting in your new opening balances. If we jump back out of there, if we now go take a look in our accounts module, in our accounts list, and now we look under our capital and equity and our opening balance equity, we need to create a new account for within this opening balance equity being our historical balances. So now we can create a product and we can use the purchases and sales for populating our historical balances and our opening balances. So what we'll do to create a historical balance in here is we simply click on our opening balance equity, create new. The account type is going to be our capital equity, and the sub account for that is going to be our opening balances equity, and the account name within that is going to be our historical balances. So any historical balances that we have, we can simply submit to this account name within our opening balances under our capital and our equity. If we go ahead and hit save, that'll open up a new field within our balance equity being our historical balances, so we can segment journal entries to that. So what we can now do is go ahead and create that product, and again, this is just another form for creating an opening balance. So we'll go create that product quickly. Go to inventory, create a product, and we'll call this product opening balances. This product type is going to be a non-inventory product. So it's a product that isn't physical. The description is going to be opening balances from previous system. Let's say that from previous system. The COGS account is going to be coming from our historical balances, and the same as the income side, it's going to be registering under our historical balances. And regards to the tax, it is usually tax exempt if you've run some sort of accrual system on the previous system. So if you did run an accrual system on that, this would be tax exempt, but just go ahead and check that. So whether it's tax exempt or not, it's up to you. So again, if there is some sort of accrual system and you have done some sort of accrual on that, whether it's a month before, after, or whatever it may be, that usually is tax exempt. That's going to be in units, and we can go ahead and set up our product now. Go ahead and save that. If we now go do an invoice for that product to whoever the customer was, whatever that outstanding amount was, we go look at ABC, and that outstanding amount was the $100. So that whole invoice was 200 previously, only 100 was paid, 100 is outstanding. This is where we're going to use that. So we're going to add our opening balances product, and we're going to say, and we're going to put in that amount. Let's see here. So say it was 100. No, for now. We can now go ahead and process this invoice. The one thing we've got to look at is once this invoice is done, we've added that remainder amount, that product being opening balances for whatever customer it is. We're going to input this data now into TrueERP, but we must set this invoice date 1 day prior to you going live with TrueERP. This will allow you to track accurately from that date. So again, set this back a day before your go live date and go ahead and save that. So there we are, as simple as that. Just adding the remainder amount or the outstanding amount, creating that opening balances product and selecting it that way. The next one is in the accounts payable, same concept. If we go have a look at that, so if we have a look at our accounts payable, same concept will work with our suppliers. You would enter these per supplier if you choose so. You could create an entry with these terms being 30 to 60 days, 1 to 30 days, 60 to 90 days. And what I mean by that is if we go back and create each transaction, that's another way of inputting the data into TrueERP. You can go ahead and create these transactions one by one, or recreating them. It's a great way to practice before your go live date. It gets everyone using the software and gets them used to how it works. So the same would apply for your suppliers or whoever you have to pay. Usually they would notify you if there was any outstanding amounts, but if you did want to go through and recreate these, you could do so. Again, that step isn't necessary, but if you would like to go and do that, you guys can. You can just enter those in manually. The next step we can look at for creating our opening balances, we can look at our petty cash or reconciliations. If we go ahead and go into our banking, we can look at our reconciliation. So again, setting up our petty cash, opening balances. How do we get these to populate correctly? And bear in mind there is usually a changeover period when doing your closing balances and getting your bank reconciliation form. There might have been a changeover period. So again, how we would get this opening and closing balance for our reconciliations would be as follows. Now bear in mind there is usually a changeover period, as I said before, and would work like so. You would have your bank reconciliation say at 20,000. but halfway through you did a change over with your systems. You should calculate the opening balance and add the old systems reconciliations to calculate that opening balance for True ERP. So again, on that form, you calculate that opening balance from the bank reconciliation form and the old systems reconciliation amounts to calculate the opening balance for True ERP. Once the True ERP's opening balance has been made, you add those reconciliations you did within True ERP to give you that closing balance. So again, from the top with your from the bank reconciliation form, you take that opening balance and you calculate that opening balance and all the old system reconciliations or check reconciliations, whatever type they were, to give you a closing balance and an opening balance for True ERP. Once you've calculated that, you take that opening balance that you've calculated for True ERP and you add all the reconciliations you did inside our software to give you a closing balance. That way, when you go into your reconciliations into whichever account, let it be you know, Amex Bank, whatever account type it is, you can enter the opening balance and closing balance accurately and accordingly. So that is just a way of doing that. What we can now do, once we've calculated our opening balances, we can do a quick journal entry just to put that in. When we now look at doing a bank reconciliation and do a reconciliation on whatever account that was, that'll then populate your opening balances, whether it's been a withdrawal or not. It'll log that journal entry and you go ahead and select that. From here on, you can do this concept with these opening balances from within your stock. You can do it with products. You can do again stock adjustments for those accounts. You can also do these with your fixed assets. The goal at the end of the day is to match your closing of the old system to the opening of the new of True ERP. So again, the old closing balance and the new opening balance should match up, and that is the goal. So there you are, that's your opening balances. Thanks for watching.